Bond prices have risen, which means interest rates may come down. Want to know how bonds affect your monthly payment and when the best time to strike is going to be? In mid-June, according to Florida Realtors, bond prices have risen, which pushed down yields on the 10-year U.S. Treasury note by nearly half a percentage point since late May. On June 14th, the yield fell to 4.212%, the largest two-week decline of 2024. The 10-year Treasury yield is important as a precursor to what mortgage rates may do. As inflation has declined, it is getting closer to the Fed's target rate of 2%. And yet, the Fed has just recently adjusted the amount of rate cuts to just 1 for the rest of 2024, which is down from the 3 that they had predicted this year in March. When do experts see the rate cut happening? According to CME Group data, investors say there's a 70% probability that the Fed will cut rates at least twice this year, with the first cut likely in September. Now, we now know that most likely the Fed's only going to do it one time, but if it's coming in September, what should you be doing as a buyer? If it were me, and this is the conversation I'm having with a lot of my customers, I would get pre-approved for my loan, right flipping now, and start shopping. The amount of homes for sale is increasing because homes aren't selling as fast. And when homes aren't selling as fast, you often get antsy sellers. And when you have antsy sellers, as a buyer, you can often get a much better deal. Let's be realistic. The market has not cooled enough where you're gonna get a 40% discount on a well-priced house. But I have seen buyers get homes under contract for under list price, with repairs after the inspection, including some concessions and closing costs. You still have to be realistic, but gone are the days, for the most part, of having to make an offer on a house within 35 seconds of seeing it and getting into bidding wars where you're paying way over asking and having to give them your dog. It's going to be a balance for buyers. Start shopping right now to see what's out there. But I personally think it would be best if you can get your house under contract before the rates drop. Because when rates drop, the person who gets antsy is the buyer, and the tables turn. Suddenly, homes that were sitting on the market are starting to generate more activity and maybe get more than one offer. And then all of a sudden, there goes a lot of your negotiating power. This is the tricky part. It's not an exact formula. We don't know the day that the rates are going to drop or by how much. And keep in mind, this rate cut is going to be slight. We're not going to see 5% overnight. In fact, we're not going to see 5% for a long time. But what I do know is that if you can secure the right property with favorable terms because you can take advantage of the uncertainty of the market right here, right now, you get to choose with your lender when you lock in your mortgage rate. This is going to require a conversation with them because typically you get one shot to do it. But if you can have your home under contract before the rate drop and during the transaction take advantage of the rate drop, you will have won on both sides. Is that hard to do and time perfectly? Yep. Even if you don't hit it perfectly though, will you still reap some benefits as a buyer? Yep. Real estate is a dance. You don't always know what song is going to play next. But if you are looking to buy, I believe that a massive opportunity is approaching soon. So if we are anticipating a great opportunity as a buyer, what we need to be doing now is preparing. Now, what have I always taught? Don't just go blindly look at houses. Find a great agent, sit down with them, and go through the process so you can make an informed decision. If you just hop in your car and go drive around, you're wasting time and money. I'm Lindsey Johnson, your resource for all things real estate. See you next time.